Good morning, everyone, and good afternoon or good evening. My name is Matt Ackley. I'm the Chief Marketing Officer of Ritchie Bros, and welcome to our latest edition of live industry panels presented by Inside Edge. You know, over the course of these COVID months, you know, we've all been struggling with connecting, and as the world kind of starts to slightly return to normal, we still want to have the discussions that help us understand what's going on in the construction industry today. You know, normally we like to do these things at our live events. We just had our big live Edmonton sale, so we thought we'd take the opportunity during this particular time period to talk about what's going on in the construction market, you know, in Canada. And we've got a great panel with us today. And just right before I introduce the panel or have them introduce themselves, you know, we're going to walk through some prepared remarks and some prepared slides. And then, you know, as we're going through those, feel free to type in questions into the team's chat, and we'll try to either address those questions as we're going on, or we'll come back at the end of some of the opening remarks and try to get to the answers of some of those questions. So anyway, thanks for all joining us today. And with that, let me introduce the panel, and I'm going to have them talk a little bit about themselves. So Joe, why don't you kick us off?
Great. Thanks, Matt, and hello, everyone. My name is Joe Wrobel. I'm the president and owner of JPW Earthworks. I'm a road builder and small gravel pit operator in the North Okanagan of British Columbia. I'm the immediate past chair of the Canadian Construction Association, so I spent the last year meeting virtually, of course, with contractors and construction associations across the country.
Good morning, everybody. Doug Rusch here. I am the managing director of Rouse Sales, now 9 years with the Rouse business. And for those of you that may not be familiar with Rouse, we joined the Ritchie Brothers family in the fourth quarter of last year. And Rouse at its core is really a data company. Through our rental analytics and our used equipment valuation businesses, we interact with and work with several hundred equipment rental companies, dealers, contractors, financial institutions. And the way our business works is that all of our clients provide visibility into their fleet and their selling activity. And what we do at Rouse is collate that information together and provide back to our customer base what you could almost think of as some real-time insights about what's happening in the rental and maybe more importantly for this call, the used equipment industry. So look forward to sharing some of those insights with you here on this call.
Good morning or good afternoon, everyone, and thanks for dialing in or tuning into our construction panel here. Doug Olive is my name. I'm based out of our head office, a global head office in Vancouver, BC, and I'm the senior vice president of our pricing and valuations department. Been at the company about 25 years and have worked in many different roles, sales and management and valuations the past 10 years. So again, thanks for dialing in, and over to you, Joe. Thank you.
Hey, good morning, everyone. I think I'll pick it up from here, Doug. Ryan Eacrett, Sales Director, Western Canada, or previously Sales Director for Western Canada for about the last 3.5 years. Based out of Edmonton, Alberta, have recently taken over as the VP of Sales for our Texas region and have been with the company just over 11 years. So looking forward to joining the panel here today and having some good conversation and answering some good questions.
Great, thanks, guys. So the way we've done this is we've solicited some questions from the community ahead of time, and you know, really trying to get at, you know, hey, what's going on in the construction market with this focus on Canada right now. You know, once again, we just, you know, coming off last week's Edmonton sale, which we know is a bellwether sale in Canada and really helps many people provides a lot of information about how the used equipment market is moving in Canada, but also, we're at a very, very, very interesting juncture, if you will, with what's going on in the world, right? We're coming out of COVID, or hopefully coming out of COVID. We've got a lot of people getting back to work, although maybe with the jobs report in the U.S. last week, maybe not quite as much as we thought. But we are just in the throes of change right now, and that's having a huge impact on the construction space, and in particular, right, the prices of used equipment. And so we're gonna run through some of these questions today with the experts on the panel, and they're going to give us a little insight into what's going on, or what they think's going on, and maybe help that information helps you make some decisions about what you're doing with your own equipment. So let's move on to the first question. I'm going to throw it to Joe, and Joe, why don't you give us your perspective on the industry, on what the recently passed federal budget means. Just give us that broad perspective of what you're seeing out there.
Great, thanks, Matt. Well, I think first and foremost, we'll speak to the federal budget. I think it affirms the key role the construction industry plays in economic recovery. The construction industry accounts for 7.5% of GDP in Canada, employs 1.4 million men and women, and investment in infrastructure provides a 3-to-1 multiplier. In other words, for every dollar spent or expended in invested in infrastructure, provides a $3 bump to GDP. So it's a good sign that the federal government is prioritizing the economy, because without it, social programs cannot be sustained unless there's a strong economy to pay for the program. So that's extremely important. So it's important to note that we're happy with what we've seen in the federal budget. However, the funds need to flow urgently, particularly communities that are in essentially a recession, like certainly Alberta, Newfoundland, and really a lot of the smaller communities. A lot of the expenditures that are occurring right now are happening around large centers, the large cities, and it's not as much happening in the rural communities. So it's important that we have the funds coming out, like the Investing Canada plan that the government has come up with a couple of years ago. It was $180 billion over 12 years to be expended, and there's still a lot of funds that aren't flowing. They're held up in certain parts of the bureaucracy, I guess, at this point. So it's important that we get those funds flowing. I mean, again, what we've seen in the federal budget, it's some positive first steps to a long-term infrastructure plan, but we need to depoliticize the decisions. As I said, different levels of government want to try and leverage infrastructure expenditures to help other program initiatives, and when they put these additional filters in, it slows down the programs, and we need to see the funds, we need to see the rubber hit the road. Also, it really remains to be seen whether the government will create an independent advisor group to guide the decision. That's something the industry has been asking for. Provide some independence so that we can try and, again, get the allocated funds spent, get the rubber hitting the road. There's been a lot of discussion that's happened previous to this that we've had on having shovel-ready projects. Another term that's come out is now shovel-worthy projects. So we need, again, to really have the sort of pressure the federal government, the provincial governments, the municipal governments, as an industry, to get the funds expended to keep our workers, the industry, moving forward. So thank you.
No, I think, look, the infrastructure, the concept of infrastructure spending and spending in general, has been a big topic during the pandemic, and we are seeing, I think, in fits and starts, governments around the world stepping in to really help drive some of that recovery. And I think, when we start to look at not only that, but some of the catching up to do, coming out of the pandemic when maybe, OEMs were, manufacturing was a little slower and so forth, we're starting to see an impact on equipment pricing, or starting may be the wrong word. We're in the midst of a serious ramp up in equipment pricing, and maybe Doug, why don't you walk us through what types of with all these externalities, what we're seeing, how is that driving pricing? What are you guys seeing out there?
Yeah, so I can lead off there, and then Doug Olive, I'll let you maybe round out the answer with some viewpoints focused specifically on the Ritchie Bros transactional marketplace. But this is a really interesting question and a great segue from some of the things that Joe was talking about. We get asked the question all the time at Rouse of what's selling, what's happening out there in the marketplace, what kind of equipment do you guys see moving? And the reason it's such an interesting question is because it provides visibility into really where is the demand, what projects are either taking place, or maybe more importantly, what kind of projects do we anticipate taking place? And not only what kinds of projects, but how much sort of work in general do we anticipate seeing in the marketplace? So I'll just provide one additional touch of context about the Rouse data set. As I said, we work with a couple hundred rental companies and dealers across the United States and Canada. And when we drill into the Canadian market specifically, one of the things we can track is across our client base, how much equipment do we see moving through what I'm going to call the retail channel. So these are rental companies, dealers, contractors selling directly to end users, folks in the dirt using the equipment. And a couple of things that you can see here on the slide that's on the page is, first and foremost, 2021 has been an incredibly robust volume market. You can see whether we want to compare to 2019, whether we want to compare to 2020 volumes, we are seeing something on the order of 50, 60, 70% more equipment selling through the retail marketplace than we had seen in prior years. Why is that important? It suggests strong end market demand. It suggests that folks have a thirst for equipment and have a use for that equipment on the other side of the transaction. On the right side of this page, you can actually see, generally speaking, what types of equipment we see moving most prevalently. And largely, these categories of equipment, lift trucks, lighting equipment, excavators, compact track loaders, they really coincide with a lot of the work that we see happening out there in the marketplace. So there's a really direct connection to some of the things Joe talked about around shovel-ready or shovel-worthy projects showing up in demand, actual demand, and increased volume of sales for the types of equipment that support those projects. Doug, do you want to pick up there and just maybe comment on what you're seeing on the auction side?
Yeah, Doug, thank you, and great lead in. And this information here is just fresh as of obviously this past week, where we just wrapped up a record sale in Edmonton, where we saw record demand, record registrations, record searches, record lots sold, and record consigners. So just to tie into the demand that we're seeing and the types of equipment that are in high demand, you can see by the as we've laid out here, the searches are coming from, obviously this was a Western Canadian sale, so primarily all the searches are from there, but the searches are from just about everywhere in North America, are looking for assets such as, whether it's hydraulic excavators, mini excavators, dozers, wheel loaders, and the small excavators. Our offering last week in Edmonton alone, we had over 230 excavators in the sale. We had 150 crawler tractors. We had over 100 wheel loaders. And just to push that into the search terms, I mean, last week we had almost 2 million equipment searches alone. So the searches are up. We know demand is strong. And just to tie into what Doug and Joe both said, the demand is going back to the amount of work out there that's in the marketplace, whether it be in Canada or the US right now. And in Canada right now, what we witnessed last week is That's a huge number, that 92% of the equipment sold stayed in Canada. That's amazing. When you talk about certain jurisdictions, and we just talked about Alberta, Joe mentioned Alberta, that Alberta, I mean, because they're such an energy-based market, there's some stress on that market right now. But over half the equipment sold in the sale actually stayed in Alberta. That's amazing, and that just shows that there is some foresight there, and there is demand on those assets, because those people know they're going to go to work and they're going to need those assets. There's work there right now. There will be more work coming. Strong offering across Western Canada, of course, and then we always complement our local bidders with the external bidders from the balance of the world. And it was just, we had a great sale overall. And we can just see that as long as we can find the equipment, the demand is very, very strong. You can see it's up 64% in equipment views from a sale a prior year. So very strong demand. And as long as the work's there and there's that optimism, I think we'll still continue to see the same for the next amount of time.
No, I mean, I think it's really interesting to see, just how the times we're in is driving the demand for equipment, and obviously that's having an impact on pricing as well. And I know, Doug, one of the great things about Rouse is you guys can look at equipment pricing across all the different sales channels. So why don't you tell us a little bit about how the market in Canada is doing right now?
Yeah, thanks, Matt. And that's right. By virtue of the data set that we collect, Rouse is not only able to comment on what is selling, but at what price point that equipment is selling at in the marketplace. And one of the really interesting ways to look at that price point question is over time, in an effort to measure, are prices trending up or are they trending down? So if we focus in on the Canadian marketplace, what you've got on the screen here is what we call our retail value index. And so what this illustrates for you is how retail values are, think retail pricing, actual achieved pricing in the marketplace. How's that trending over time? And you can see exactly, as we've been discussing, that increased demand that we've seen in recent months is showing up as elevated pricing in the marketplace. The way to interpret this chart is you can see from March, you see the index is 1.0 to here in April, 1.04. That means used equipment is selling at 4% higher price points today than it was just 60 days ago. So it's really a remarkable trend when you take everything we've talked about and think about it together. Such an increase in supply, more equipment moving, but the demand being there to absorb that equipment at an elevated price point really indicates a strong marketplace right now. If you want to roll the page forward, thank you. We also can look at this on the auction side. So Rouse tracks about 55 auctioneers operating across the United States and Canada. We don't just look at Ritchie Bros and Iron Planet. I'll let Doug talk about what he's seeing specifically on the Ritchie Bros marketplaces. But when we broaden out and pay attention to really all the auctioneers that operate in Canada, you can see an even more remarkable increase in sale prices here. Today, we're sitting at a Rouse auction value index of 1.15. That means machines are transacting at 15% higher price points for the same gear, the same age profile, as they were back in January of 2020. So, certainly COVID created some ripples in the auction marketplace. You can see that in the downward trajectory of that line right about March, April, about a year ago. But since that time, we've been on a rapid acceleration of price points. And what's really interesting is the index you're looking at here is all types of construction equipment blended together. If you extract this out and pay just close attention to dirt equipment, small, compact size, earth moving equipment, this index is something like 1.29, suggesting 30% higher price points than last January. So the trend is different across different types of equipment, to be sure. That aligns with, really where the supply and the demand are meeting in the marketplace. But the general trajectory is increasing values in this marketplace, largely as a function of all that demand that we're seeing in the market. Doug, is that consistent with what you're seeing on the Ritchie auction side?
Yeah, very much so, Doug. We are certainly we're seeing the demand outpace the supply, and we have seen that. Just going back a slide, when you look to see what we were like last March, and then obviously we step into the pandemic, we step into COVID, and we really weren't sure at that point in time what the next 3 months, 6 months, or year would look like. But obviously, with disruption with the OEMs, disruption with dealers, disruption with supply chain. All these words that we say, but they're very, very true. And even lately, probably the past month or 2 months, everyone's heard this disruption of semiconductor chips, and it's a huge one, and it's driving demand for such things as pickup trucks, truck tractors. Literally, almost everything we have in today's manufacturing requires a chip. So just those little disruptors can certainly change our business. And we have seen for sure elevated pricing almost across all categories, some higher than others. And again, it's got direct correlation with how the OEMs are supplying their dealers with product. And if contractors can't get assets to go do the work, they're certainly looking at us, and that just shows. I mean, the 2 million views we had for the Edmonton sale, it certainly shows that people are looking at other options to find equipment, and we've got the late model, lower hour units available, and we're driving demand for them, and obviously in tune, we're driving pricing for them as well. And yeah, we've been very pleasantly surprised with pricing, certainly over the past 3 months and even the past 6 months. So,
no, it's interesting, Doug, that you bring up the technology angle, with the chip shortage and stuff like that, and we even have a little bit of a cybersecurity incident or issue in the U.S. right now with the pipeline on the East Coast, and so it's very hard these days to separate us from this influx or this impact, if you will, of technology, on our industry. And I think that's something we can't ignore with, not only as we just talked about, all the various aspects of technology, whether it's how we buy and sell equipment, whether it's how we build the equipment, whether it's how we, transport commodities. So Ryan, why don't you talk to us a little bit about, what you're seeing. How is technology impacting the types of equipment that the buyers are looking for?
Yeah, you bet, Matt. So I think it's interesting. What we see here really sort of evolves along with the innovations that come out from the OEMs and the manufacturers. And of course, the cool thing about when you look at the purchases that people make at auction is that really for every level of asset, whether it's your newest, most late model piece of construction equipment or transportation equipment, right down to your bottom tier, just sort of, this side of a parts only piece of equipment, we've got sort of buyers at every level. And when you look at what's happening today, sort of the rapid advancements in technology, it's staggering, and it's almost as if, and I believe it to be the case to some extent, they're sort of in a race towards, autonomous equipment almost. And a lot of these technologies that we see, like your grade control systems, your telematics systems, that come part and parcel, oftentimes factory integrated now in some of the new assets or newer classes of equipment from different manufacturers. You have to understand the reason that a contractor might want a piece like that. And of course, in these challenged times, such as we're in, you've got, pressure on margins. You're talking about competitive, bid work. And you look at this technology as something that's really geared towards improving efficiency, improving your production capabilities, and improving your overall safety performance. So when you look at assets at the absolute top end of it, we're always going to have buyers for that level of equipment. And on down through the ranks, you can look at all these different things that impact, equipment that is not necessarily your most late model or equipped with the latest technology. And oftentimes it can be, different markets that drive purchases for assets at different levels. Different areas of the world have different standards for emission compliances. They want different things in terms of the technology and the electronics that the equipment is equipped with. So when something falls out of vogue in North America, you're going to see other parts of the world sort of pick up and fill these gaps in demand. And just locally, one really specific example we can sort of cite that's been phenomenal to watch is just the evolution of Tier 4, engines in trucks and equipment since about 2012, right? We know that this is great from an environmental standpoint. It's the right thing to do from a manufacturer and OEM standpoint, but it's caused issues for contractors along the lines as these technologies have evolved. And one of the things that we've seen over a number of years is the demand for trucks or equipment with pre-emission engines in a lot of cases in different jurisdictions has spiked as a result. So I guess that's all just to say there's a ton of things to observe here that evolve over time that we're always learning a ton from our customers on. And it's very cool. And the pace of change today is phenomenal. So, we rely on our customers and the market at large to sort of keep us abreast of the latest and greatest. But, there's lots going on, to say the least.
Yeah, a lot of this focus can, really, really force people to think about the total cost of ownership, right? Because there's just a lot going on here. And, how does this play out with, used equipment?
Well, I think right now, again, perhaps more than ever, I've not been around for that many years, but I've been around for a few years. I feel like understanding the economics of your equipment, if you're an owner, and Joe's going to chime in here to either back me up or tell me I'm crazy, is probably more important than ever. And when you look at the different value propositions that exist between buying new versus buying used, because of course there's a lot of new equipment in the market today that is very expensive due to the associated emission systems cost. Of course, in Canada, we've got the weaker Canadian dollar that I think when you consider the environment that we're in, economically speaking, it's caused a lot of people to think long and hard about how they buy equipment, when they buy equipment, how long do they hold on to equipment before they sell it. And I think there's a lot of sort of pieces of the puzzle that go into a properly maintained fleet, how you own that fleet, whether you're buying outright new, buying outright at auction, you're leasing, you're financing. One of the things we hear a ton about, or have heard a ton about in Alberta over the last 4 or 5 years, is there has been a lot of idle fleets, is the fact that there's a very high amount of attention paid to sort of the understanding the economics of underutilized assets, and the need to, rather than have something sit in your yard, you can sell it if you need to determine what it's worth. Of course, Ritchie Bros has a pile of tools to help you do that in a intelligent way, but recognizing the need to raise capital that can be deployed elsewhere within your business, and that type of thing. And I guess the last thing too is just as it relates to purchasing equipment, is just understanding that, again, the used value proposition, or the proposition for buying used, is oftentimes compelling when you're looking at equipment that you're only going to use sporadically, right? And you're not going to want to necessarily have financing tied to as it sits in your yard and you can just, sit there and, watch money go out the door, as it effectively does nothing for you between jobs. So I think Joe will probably have a lot to add there as a business owner, but just from our perspective on the auction side, those are certainly some of the conversations that we have day in and day out with customers.
Ryan, you're absolutely correct. My discussions that I've had with contractors across the country certainly support everything you've said. My own example was in 2013 when I took over a 6-year contract in highway, road and bridge maintenance. I was able to do that because the company that sold the assets to me sold me essentially their older equipment. They had other contracts. They scalped off much of the newer equipment, selling me the older equipment, which was a blessing for me in some ways, because that was less capital that I required to get started. I was able to order some new trucks, and that sort of, which were the early 2013, so really the early stage of the Tier 4 engines, which you mentioned earlier as well, and that was sometimes a bit of a problem when you're at the front edge, or at sort of the leading edge of some of these changes in technology. You have some accessibility issues, and so I looked at my fleet and I felt, in other words, to be able to be successful moving forward, I had to find a way to transition my fleet so that I would turn over a smaller portion each and every year. So I had to fill in the 2004, 2005, 2006, 2007 units, or that mid-range portion, to try and so I had a staged fleet. So that was important for me. But every contractor, you have to look at your own situation, and as you said, it depends. It depends on your utilization. If you've got a particular contract where you're not going to get very high utilization on a piece of equipment, you may not necessarily want to have a new piece where you're going to have all that capital sitting there for that time. You might a used piece or something with a few more hours, but still be serviceable for you and provide that the productivity that you require. So there's a lot of different aspects and facets that you look at, and that can change from contract to contract, from project to project. So you need all the tools, you need all the availability to sort of piece all these various aspects together.
And, obviously when you're, making decisions, stuff like this, maintenance and warranties are can have a big impact, and we're starting to see some of that as well, with more and more of this stuff being transferable, I imagine, nowadays.
Yeah, and again, I think it's interesting, particularly as you start talking about the really late model stuff that is equipped with all kinds of electronics, sensors, the more bells and whistles it has. And again, I'm sure Joe as an owner could attest to this, the more likely that you're going to run into problems or need service or maintenance, or to have a dealer tech come out and see you. So obviously transferable warranties, particularly manufacturer warranties, are incredibly valuable from a resale marketing standpoint, because it's just, again, it's sort of value added peace of mind that even though you're selling through auction, we can take and leverage and have a potential new buyers know that this is available. Of course, it's one of these things because, oftentimes it's coming from a manufacturer, potentially a dealer, or somebody else that's done work that they're prepared to put a warranty behind. It's not for us to say that the warranty's valid or invalid. So when we're marketing those types of warranties, which we absolutely always want to do, it typically comes with some type of disclaimer that indicates transferable warranty may be available, but it's important that the buyer or potential buyer contact the dealers within their area to ensure that. Because a perfect example of, you can say, a piece of Caterpillar equipment from Western Canada where you have Finning as a dealer, they'll back up a Caterpillar dealer or a Cat warranty or a Finning warranty on a transferable basis to something that sells within their trading area, but might not necessarily be the case if that piece sells to the southern states and all of a sudden, becomes part of another dealership network. So there is some due diligence that needs to be done, but warranties are huge today. If they're transferable, we're absolutely leveraging them to the benefit of our consigners and to give more peace of mind to buyers. And I guess beyond that, one of the things that's still relatively new for us, but we've been doing for a few years, is we will, through a third party, provide warranties of our own, which again, it's on pre-qualified pieces, of course. There's a vetting process that they need to go through. But, by doing that, we're able to provide just that much more peace of mind, again, to consigners to ensure maximize value, but peace of mind for buyers too. So again, it's as important today probably as it's ever been. And, when it can be leveraged, we're absolutely leveraging it.
Ryan.
No, it's just once again, it's just this technology stuff that's having a huge impact. Other than other than the technology stuff, what's keeping contractors up at night?
Well, probably a lot of things. Mostly uncertainty, I guess, is probably the main thing here, Matt. One of the things we've heard, and I heard a lot over this past year, and prior to this, I think when we were moving in this for a number of years, but the pandemic really sort of exacerbated it to some degree. And when talking about workforce capacity, it's the ability to find the skilled labor that we require, and not only the skilled labor, to find the management staff that one requires. I just was talking with a contractor the other day who normally has bid projects and is letting some go because he just can't put together the appropriate management team that he feels that he needs to be successful in that contract. So he's bypassing that, and that's for some work in British Columbia. Whereas in Ontario, for instance, he's continuing to bid because he has in that particular area, he feels he has enough talent, a pool that he can draw on to make work. So it's a problem. It's an issue that we've had, and we've discussed it. Certainly, the BC Road Builders, Canadian Construction Association, the regional partners in British Columbia, the BC Construction Association as well. And we're working at looking at how do we attract people to the industry. That seems to be a common theme. How do we make the industry a career of choice? So that's really, I would say, the workforce capacity is an issue. The second part is sort of the lack of sort of a long-term infrastructure investment strategy. In other words, some certainty to what's happening, some certainty to expenditures. And I mentioned it earlier. There's allocations from the federal government, but at times there's delays in seeing the rubber hit the road. Talking with a contractor in Manitoba, he said he's a fourth generation company. But if we can't get some of the work moving forward and have some certainty, he doesn't think he's going to be a fifth generation company. So that's concerning to us as an industry, and should be concerning to us, that we need to find a way to get some certainty in the investment strategy. And as well, we've talked about this earlier in this discussion, the whole supply chain and material cost escalation that's occurred. The third wave of the pandemic has slowed things down. There's new equipment and delivery date delays that have occurred. We talked about that. I think Doug was mentioning that in the discussion of some of the pricing. And I know I had it when I had a discussion with an equipment dealer over a skid steer. He said he just can't lay his hands on new skid steers right now. They just don't have the components to complete them at the factory. So that's driving up the pricing of the used market. And then I put one other point in here, and that's the Buy America program. And that's one where we were not sure what's happening down in the States and what that's going to do. But I just sort of looked at a commentary from the Export Development Canada. Peter Hall, who's the chief economist, was talking about it and mentioned the Buy America program and the investment that the Americans are doing. And although it seems like the Buy America program may pull some of the work and be a drawdown on the Canadian economy, it looks different now. The OECD, which is the Organization for Economic Cooperation and Development, actually their analysis shows that it's looks like it could be a 1% boost to the bottom line in Canada from the measures. So there's bound to be something happening there. And when I've looked at again, I'm not an economist. I looked at Peter Hall again and his prognostications. And what they're looking at is that they feel there's going to be, when we get through this, and we just have to find a way to survive in this next peak. But maybe that's what you're seeing in this equipment market with the prices driving up, is that people are trying to get prepared for us coming out of this pandemic. And as we start riding up that, they're talking about being a tsunami. And they said, get ready, get ready for the wave here. If you can surf the wave, if you can survive till then, get ready for it and sort of hang on for the ride, because it could be quite a ride coming forward. So maybe that's part of what you're seeing in some of these equipment pricing. People are starting to try and get ready. The fact that we have the not able to get some of the newer equipment in, that's driving the prices because of supply chain. So those are some of the things that, again, that are, as I said, that I've heard across the country, sort of keeping the contractors up at night. How do they plan for the work? How do they ensure that they have the work? How do they keep their workers working? Do they hang on to them? They're worried about, if they don't keep them in this time, are they going to have them when the work starts to come forward? So they're just finding a way to try and survive, get through this, and get ready and prepared.
Yeah, I mean, it's fascinating. I know we're not economists, but if you read anything nowadays, that word that starts with an I is starting to creep into a lot of conversations. I have a friend in the pool business, and they don't even know if they're going to be able to have chlorine this summer in the United States. So commodity prices, equipment prices, gas prices, it's fascinating. Then you throw in, as you're talking about, where's the labor force, where's that going? And then, one other layer of complexity on top of all this are, environmental concerns, right? And, how do you think about, some of the impacts, on some of the sustainability initiatives? How's that going to impact the stuff you're doing, Joe?
Well, I think if we look at that, we need to get government, industry together to talk about that, because the industry is doing quite a bit in going forward and trying to green the industry, and that there are a number of aspects and effects from climate change, and there's a number of things we need to do to prepare for that, to make the infrastructure more resilient to climate change. So I think that's the aspect, sustainability of the industry that affected, again, by the environment. And so, but we need to have a broader conversation. It's hard to have it with industry or just government. We need the government and industry, labor, workforce, everyone to get together to talk about it, to find a way to move forward, to make so that we can be sustainable and we can be resilient to climate change.
Yeah, so one question that came in that we didn't talk about, it's kind of impacting. I've kind of been referencing it a little bit just because I live south of the border. What are we seeing? Comparison between what's going on in the U.S. and Canada in terms of equipment pricing. I don't know if the two Dougs can jump in here. Are we seeing things that are happening different in the U.S. and Canada, or are they pretty much moving in lockstep?
Yeah, maybe I can field the first part of that, and then Doug Olive, if you want to, as we've done here, kind of ham and egg the auction side of things. I think it's a great question, and the macroeconomic trends that are driving increases in machine pricing really are happening both north and south of the border. So we see values, whether looking at the retail data or at the sort of the $4 billion plus of auction data that Rouse collects, we are seeing values rise regardless of channel and regardless of country. The magnitude of that increase in pricing certainly is going to vary by type of equipment, by class of equipment, and it varies a little bit, depending on whether or not you are north or south of the border. But that general trend of rising values, that general tailwind behind us of increasing price points across retail and auction, we see happening in both marketplaces. Interesting. Doug, do you see the same thing on looking at the Ritchie Bros data?
Yeah, very much so, Doug. We just, of course, we just came out of an auction cycle back in late March, early April. 45 days ago, and we've got another one coming up, and we see the demand still very strong. We suspect the pricing will still be strong for the net effect that we haven't seen any changes to whether it's the OEMs or again the supply chain issues. So we suspect, and we have seen strong pricing, and we expect to see that for the next amount of time, and the demand is certainly there. So.
No, I think, look, I mean, I think to sum it all up, and, I want to thank people for the pre-questions and the couple questions that came in during the conversation. But just to, in sum, we are in a period of tight equipment supply, heavy utilization, potentially heavy infrastructure spending, and, somewhat, inflationary commodity pricing. It really creates some interesting dynamics for the used equipment space. And I think, to end on a note here, one of the things, as Ritchie Brothers, I think most folks over the years have, primarily known us as an auction company, but, over the past year and a half, we've really tried to build out tools and platforms, if you will, to give you guys out there and gals information that can help you run your business, right? Information on pricing, how they're changing, where equipment's being sold, where it's being bought. And we've developed a number of tools over the last couple of years, like I've mentioned. We've also went out and brought in the Rouse folks to help reinforce that and help us improve those capabilities. So anyway, just a final message as we end up here. If you're looking for some of these insights, come visit us at our websites, or work with your territory managers, who can give you access to these tools so that you guys can make better decisions. So with that, that's all the questions we had for today. I want to thank the panel. I want to thank the folks that attended. As always, we record these sessions. We'll be sending it out. So, if you have folks in your network that you think might be interested in this information, look for the recording coming soon, and you can pass it on. So once again, as always, really trying to stay connected. Hopefully we're going to get back together and be able to see folks soon. I know I've gotten my 2 shots. I'm looking forward to getting on an airplane. But until then, we'll try to stay connected via these digital means. And then, with one final note, everybody just stay safe out there. So with that, thanks to the panel, and thank you all for listening, and we'll talk to you soon.
Thank you all.
Great.
Thank you.
Thanks, Matt. Thanks, everyone.
All right.
Thanks, Matt. Well done, everyone.